Hello, everybody. Welcome. Thanks for coming. My name is Bill Hershey. For those of you who don't know me, I'm a cash flow coach helping integrative health professionals make a great living doing what they love. And today we're going to present to you some super cool tools. The main tool I'm going to be showing you is called the Cash Flow Compass. And this is not just to project, it's a revenue projection tool, but it's also a tool that can be used to actually project what lifestyle we want to be leading. And I believe, it's really important for us as entrepreneurs to not just track our revenue and our business performance, but also to track the things that are valuable to us. What is the reason why we're even in business in the first place? What are the things that our business is here to support for us in our lives? Is it family? Is it for us to be able to contribute to the world in various ways? What are those things? And how do we want to be spending our time on a day-to-day and week-to-week basis in order to balance our lives with our business and our personal and or family and or community life? Okay, so excited to share these things with you. I'm going to go ahead and jump in here, share my screen. So the other day, I shared with you a little bit about, those of you who are health professionals here, which is, I think, the majority of folks here at this time, you probably learned at some point about the anatomy of the brain and these different parts of the nervous system. And what's super cool, this might be a little bit of repetition, but for those of you who weren't with us on Tuesday, there's a part of the brain called the reticular activating system, or it's abbreviated as the RAS. In the business world, they're realizing that this core part of the brain is responsible for a function that's just as relevant in business as it is for human survival, and part of its reason for evolving in the human brain in the first place. So what is this reticular activating system? The RAS is what connects our conscious brain to our subconscious brain and our senses. If you can imagine a chariot being pulled by horses with a driver driving that chariot. This is a really popular metaphor from ancient mythology. And it's referred to as the chariot myth. And the metaphor is such that the horses drawing that chariot are likened to the senses, right? You have 5 senses, so it's like 5 horses pulling the chariot. And then you have these reins that are held by a driver driving that chariot. They're using those reins to control the senses and guide the chariot to where the chariot needs to drive to. So the driver in this analogy is likened to the mind or the intellect, right? Let's actually use the word intellect. The reins are likened to the parts of our mind that connect our senses to the intellect. The chariot itself represents the body. And then there's actually a passenger in the back of the chariot that represents our core consciousness. You could say the soul or the higher self, who is a witness to this whole journey, right? Now, within this analogy, running with this analogy, the reticular activating system is like the reins that connects the senses to the intellect, right? So what the reticular activating system does is it filters all of the information that we are bombarded with from our external environment through our visual sense, through our auditory sense, through touch, through taste. It helps us focus in on those impressions, those sensory impressions that are most salient, that are most important for us to get what we want in life. So for an ancient human who was a hunter or gatherer, perhaps in the forest, their reticular activating system helped them hone their senses, hone their attention on the most important information that was going to help them find food and find survival, or perhaps find a mate, right? So those were some of the core drivers for their lives. Now, what's cool is that folks in business are realizing it's the same neurobiology that's at work when we're setting goals for our business and looking for ways and opportunities to further our progress towards these goals. Okay, so another salient point here in I think you're going to see how this connects to what we're talking about today with cash flow. Those who write down their goals are more likely to achieve their goals than those who have goals but don't write down their goals. And that's actually been documented and studied. And what's even more interesting is that those who write down their goals multiple times are even more likely to achieve their goals than those who only wrote down their goals once. Now, what they've discovered is that when we write down goals, we're imagining these goals, we're working towards these goals, it's actually activating the reticular activating system. So this is what we're working with. This is the neurobiology, just to kind of like map it out. This is how this is working when we're actually writing down financial goals and creating a financial forecast. Now, I can't prove to you that writing down a financial forecast, I don't think this has been studied, is going to actually help you become more likely to achieve your financial goals. But how many people, raise your hand if you think it's likely going to help you? Yeah, I don't see any hands because, okay, we got Andy. Thank you, Andy. Yeah, in the accounting world, okay, we got a few hands. Wonderful. In the accounting world, just from an anecdotal perspective, people I talk to, that yes, when folks write down their financial goals and track their financial goals on a monthly, possibly even a weekly basis, it's amazing what kind of results can be produced. It's quite remarkable. So I'm gonna, without further ado, jump out of there and introduce you to the cash flow compass. And by the way, I would love it if somebody wants to study and do a research study and find out, for folks who are tracking their financials and doing projections and actually accomplishing their financial goals, which ones are accomplishing it versus those who aren't, if they're not writing down those goals. I would be very interested to see that in data. Okay, so this is the cash flow compass. I'm going to go ahead and share this link with you. I think I sent this out in an email for everybody, but just in case, I'm going to, so a couple people are giving me the thumbs up. Also going to put it in chat in case anybody didn't get it. And there it is. If you got two monitors, feel free to open this up on a separate monitor. If you got another device like a laptop or an iPad, it would be awesome to be able to kind of like follow along and kind of punch in some things for your business as you watch me show you how to use this tool. So diving into the cash flow compass, the first thing that you want to do when you come into these publicly, this is a template that's available for the public. So what you'll need to do is go to File, and you see this, it's in the image in case you forget. Go to File on the top of the screen, drop down, go to Make a Copy. Create a copy of your file. You can change the name to whatever your name or your business name is, put it in your own Google Drive folder, wherever you want it. Make that copy, and then you'll have your own. So I'm not going to actually use this sheet because that's the template. If I start writing over it, everybody's going to see that in there. So this is a sample copy. I've made my own copy. In the first area, you want to make sure, because I already have it written as 2023. We're all going into 2023, but you can use this for next year for 2024 or any future year after that. You want to make sure that you update this in the second piece. So just going tab from tab, from left to right, starting point, make sure that's 2023, or if it's a future year that you're doing this, update the year there. And that updates the year that's going to be used in some of the later sheets in this document, in this workbook, I should say. Okay, so this is the sheet that you're going to use to actually set your goal for the year. So the way it's going to show up for you, I'm going to just bounce back here so you can see the difference between blank and non-blank. My actual sample. This formula here is going to show up as today's date when you open yours. What I would recommend doing is overwriting that and start your forecast on January 1st, 2023, because that's of course, we're coming up on the new year. It's perfect time to do this, by the way. But if for some reason, for those of you who might be watching this asynchronistically, you can set this for, maybe the first of the following month or whatever the first of the following quarter is. If you're doing it that way, this is going to be a 12-month forecast. So this is, starting it from the beginning, this is what I'm going to demonstrate here today. And it's naturally going to be 12 months as the forecast. Of course, there's 12 months in a year, but it's been recommended to me by one of my accountant mentors to actually turn up the heat a little bit, crank up the volume. And by reducing this from 12 to 11, you can actually generate a more aggressive goals to work towards your annual goal. So how does that work? Let's start with just the 12-month time limit. That's going to set your target date as 12 months after your start date. So that's going to be from January 1st to 12/31. Amount desired, I just kind of gravitate towards these naturally Vedic numbers, $108,000 in a year. You can pick whatever makes sense for you in your business. If you're just starting out, you might pick, somewhere in the realm of 5 figures. If you've been in business for a while and especially if you have employees, you're going to definitely want to be in the 6 figures, especially if you got full-time employees, because you have overhead and you have expenses to cover. So whatever, bearing in mind that this is gross revenue or total revenue for your business, not just the amount that you're taking home for yourself. So remember that. And just a quick note, this cash flow compass tool, which is also, it can be called a sales projection sheet or sales forecast, or a revenue projection sheet, revenue forecast. So you're not going to see expenses on here. So I used the word cash flow compass because I thought it sounded fancy, but technically I'm just going to break the news for you here. Technically, it's not cash flow because it's only measuring the inflows. It's not actually measuring the outflows. Another name for outflows is expenses. So that could be done in another way. But for very small, simple businesses, my bet or my suspicion is that your expenses are probably not going to be very complicated. You're probably going to, especially if you're like working virtually, you're probably not going to have a big overhead, and it's probably not going to vary very much from month to month or from year to year. So, you can, I'll give you another tool to work that out, a budget tool. Actually, I didn't plan on giving that to you today, but if somebody wants it, I'm happy to share it. Okay, so back to the sheet. This is really only tracking income. If you say you want $108,000 in a year, you got 366 days left for that goal to be accomplished. I think that is probably this formula is it should really be 365, but it's not a big deal. So this sheet is going to give you a monthly goal based on that annual goal. So it's dividing that by 12, right? You got a simple formula, divide by time limit, which is 12. It's going to put you at about $9,000 per month is what you want to be earning per month. Per week, you want to be earning about $2,093. And per day, and this is assuming you're working 5 days a week, you can adjust that formula to be 4 if you want a 4-day work week, 3 if you want a 3-day work week. If you're working 6 days a week, God bless you. You can put 6 in there. So this is going to give you your monthly, weekly, and daily thresholds, right? That just gives you like a rough idea of what you need to be shooting for as you build out your projections, and also as you track your projections. And we'll look at both of those. Now, we talked about reducing the time limit from 12 to 11 months. Let's just take a quick look and see what happens. Because the reality is most of us are probably going to take some vacation time. If our body needs to recalibrate, we might get sick for a certain period of time in the year, which may not necessarily be a bad thing. Maybe it's our body's natural way of detoxing, right? We're keeping our terrain in good condition, then maybe we don't need to do that. But so factoring in that you may not actually be working all 12 months of the year, giving yourself some time off. This cranks up the goal that you want to basically achieve 108,000 in 11 months rather than 12 months. So that puts you at about 9,800 per month, 2,300 per week, and about 450 something and change as a daily goal based on a 5-day work week. Let's keep it at 11 for now, because if this were my cash flow forecast, I would want to take some time for things like retreats and other things. Okay, so we have our revenue goal set at this point. I'm going to take a jump here into the next realm, which I mentioned in the beginning, is it's important to be very intentional about what kind of lifestyle we want to be leading as an entrepreneur. How many people here have heard of the book E-Myth by Michael Gerber? Has anybody here heard of that book? It's a wonderful book for entrepreneurs. And for those of us who want to be proactive with our business as opposed to reactive, the same way that most of you as health practitioners, we instruct our clients and our patients to be proactive with their health, to avoid getting sick, doing the things, nutrition, lifestyle to prevent sickness. We can take that same mentality and apply it in our business to be do the right things for our business, give our business what it needs so that we don't encounter business problems or financial problems. Okay, so we can also be proactive with our lifestyle as an entrepreneur. Michael Gerber, coming back to this, I didn't mean that to be a tangent, but Michael Gerber wrote this wonderful book called The E-Myth, or The E-Myth Revisited, where he talks about the common entrepreneurial problem of folks just creating a business that kind of takes over their lives, and people burn out. And a lot of businesses, sadly, just don't really make it past the first several years. And one of the main reasons is not understanding cash flow. So hopefully this cash flow compass is going to help you with that piece. But the other reason is it's as if, an entrepreneur, we build these systems in this kind of, it can end up being kind of a beast of a business that is totally reliant on us. But how can we create the systems in our business that generate efficiencies for us, that reduce and minimize the amount of inputs that we as the entrepreneur need to put in, so they can run potentially without us, or potentially with other people running elements of the business, right? So that's really the leverage that we need to seek in order to move from in startup. Yes, it's going to be a lot on your shoulders in the startup phases in the first couple of years, more or less, but we want to be shooting for a position in our business where we're in a stable orbit, where there's steady revenue from month to month, where we have systems set up that we have a means to attract clients and patients consistently on a month-to-month basis to support that monthly recurring or stable revenue. Okay, so this may look different if you're in the initial stages of your business than if you're kind of more in that second stage of business where you're stabilizing and you're beginning to systematize and scale. But regardless, I would, set this for whatever you think is realistic for you this year, whatever stage of business you're in. So time for, this is just in order. You can put this in any order you want, but I recommend leaving it the way it is. And, there is a logic behind this. I think this is very personal. You're welcome to mix it up. But the logic here is that, everything else is kind of dependent on us being able to physically perform. And so taking care of the body, of course, folks will say the body is the temple. And that can mean taking time to exercise, prepare nutritious foods, to cook, to shop for healthy foods, doing the physical things that we need to maintain our bodies, to maintain our lives, right? So how much time per day do you need to dedicate towards that? Write that here. For me, just in this example, I'm writing 2 hours, just kind of summing it all together. For mind, in the realm of minds, this may include creative and or intellectual goals. It could include the books that you read, the amount of time you dedicate towards study or self-development, creative pursuits. You could put that here. Now, I use the word self-development. That could actually cross into the third phase here, which is the area of our life that is spirit or spirituality. And this could be your spiritual goals, the time you spend meditating, praying, spiritual study. If you don't necessarily identify as a spiritual person or as somebody who's, focusing time and effort on spiritual development, that's totally cool. Maybe you just call this self-development. How can we be more of a master of our emotions? How can we be happier? How can we perform to our capacity? How do we be the best me that I can be, right? So, you could use the word spirituality, you could use the word self-actualization here. Okay, how much time would you like to be spending doing that? Maybe you want to spend some time in meditation, a certain amount of meditation time per day, whatever it is. And then this fourth area is important. We don't want to leave this out. And I would actually separate this from your business, which is your money goals or your money area. This is time dedicated for time management. And if you look at the lives of successful entrepreneurs or pretty much anybody who's successful in their life, they've learned to become the master of their time, the hours and the minutes of their day, or even in these micro moments, right? They learn how to stack habits together, how to build efficiencies into their routines to maximize their ability to be effective and happy and fulfilled in life. So, you might spend, maybe as simple as taking 15 or 20 minutes or 30 minutes a day, kind of planning out the next day and kind of tracking progress or your work, your task list for the week. Maybe you take 2 hours on the weekend to kind of lay out tasks for the week so that it's a little easier for you to do your day-to-day planning. Okay, so another area here is time for people, your time for family, partners, I should say partner, not partners, friends, community. I suppose some folks could have multiple partners. There's nothing against that. But okay, so you may allocate maybe 3 hours a day for this activity. Then you have financial goals. How much time do you want to actually spend working in and on your business, right? So, and kind of coming back to Michael Gerber's book, one of his key points is that as a startup entrepreneur, it can be very tempting for us to spend all our time working in our business, serving clients, delivering the services, delivering our goods, whereas it's crucial for us to evolve into a stable orbit in our business to also allocate time to work on the business, to actually, again, developing those systems that allow us to build efficiencies and to effectively delegate so that it's not all on our shoulders and that we're not building a business burnout, a burnout model for our business. So again, Michael Gerber goes deeper into that in Myth, the book that I mentioned a couple minutes ago. So with this, once you add this up for yourself, you're going to get a total. And that total, for this example, it's 15.5 hours. That's a decent amount of hours. How much time for sleep does that leave? Mm-hmm. Right? There's only about 8.5 hours of sleep in there. We're all living a 24-hour day. Sometimes I wish there was more hours in the day. But the first time that I did this activity, I was like, oh, I'd love to do 3 hours of this and 2 hours of that. And I realized, wow, okay, so 19 hours, only 5 hours of sleep. Is that realistic? You may have to go back to the drawing board and sort of rework it depending on how that's looking and depending on what your sleep requirements really are. It can vary from person to person slightly. So here are a couple apps that I think could be useful. One is called Clockify.me. The other one is called Toggle. These are time tracking apps that can help you actually become cognizant of how much time you're tracking on various tasks, whether it's personal. You can install it on your phone and just kind of like, you might just do a time audit of your time over the course of the week. I've done it before. It's not something I particularly enjoy, but it does help me wake up to certain things. I do it especially with client work, so I can kind of have a gauge on how much time I'm spending on client work. If I clocked how much time I spend kind of fiddling around on social media or LinkedIn, it's a little bit of one of my weaknesses. These platforms are really designed to like absorb us and get us lost and disoriented. It's like I forget what I was doing. If I jump into LinkedIn to check something, I kind of get lost in there for 5-10 minutes sometimes. So tracking it in an app like this can help us become all the more acutely aware of where we're leaking time. And so I'll just confess, I'm not invincible. There's definitely areas where I can be tightening up my time and my day. And it's by paying attention to it that we can make progress in that regard. And I don't think I'm alone. Maybe throw it in chat. Say like more time. If you feel like you could use more time in your schedule, if you feel like you could if you could be benefiting from managing your time in a better way throughout the day. I would love to, throw me a quick note in chat. More time, wonderful, awesome. So I'm not alone on that one. Thank you. Okay, so I'm going to jump over to the second part of the time goals. This is where we're going to lay out. We have generally what we want our daily schedule to look like. This is the second phase of it, where we're actually going to lay it out from for the various days throughout the week, because of course, not all days are going to be the same. When we're looking at this is obviously like 8 hours of work in this day. It's not going to be like that on a weekend, hopefully, if you want to take a weekend off, right? So this is how we kind of make an adjustment for that. It's with that template. This formula automatically brings those over. And just a quick note, side note, if you change the order of those, of these areas of life in time goals part 1, you'll need to also change it in here for time goals part 2, and you may have to change the formula here of how it's bridging over. So just a quick note, I messed that up the first time that I played with this sheet. So forewarning on that. So here's where you're going to actually lay out what you want your schedule to look like on, say, a Sunday or Monday. Like, if I'm working a typical 5-day work week from Monday to Friday and I'm working 8 hours a day, this is how this might look. I tend to be a person who likes routine. I like for my body to get into a rhythm with that. I think, just from studying chronobiology, the circadian rhythm, Ayurveda is a life science that focuses a lot on the benefits of attuning our bodies and our lifestyles to our natural circadian rhythm. There's a lot of performance enhancement that can happen just through that alone. So I think, Ayurveda has these 3 body types. According to Ayurveda, all body types can benefit from developing routine in their schedules. Okay, so here we are. This is just an example of what mine looks like. I actually kind of leave some room on Saturday that I can kind of have some flexibility. I don't necessarily have to bind myself to any particular activity. And once you have that, you can actually put that into your Google Calendar. You can create your weekly schedule based on what proportion of hours you want to spend doing what. Okay, so here's what that looks like in a Google Calendar. And of course, you can do this in an Apple Calendar. If you're an Apple person, you can use your Outlook calendar if you're a Microsoft kind of person. So again, it's like, I like having a schedule. What keeps me like on track and sane may actually drive you crazy. So that maybe this isn't exactly how you're going to apply this tool, but these are just ideas. Now, so I gotta get rid of that. I don't necessarily bind myself to this. And this isn't actually my schedule. Like, I don't have kids. I just kind of put this as an example. Kids to school at 8:30, patient hours. I don't have patients. I have clients because I'm a business coach. Batching certain activities, I think, can definitely help you win back time, like checking your emails all at once at a certain time of day. This is a big time leak for me. I'll just kind of like jump in and out of my email box throughout the day. And it's hard for me to actually do deep work or deep project work if I'm constantly bouncing back and forth. You might dedicate a certain amount of time towards professional study. So this is what this can look like. And again, you may be shooting for a 12 o'clock lunch in general, but it may not always land that way. And you can give yourself flexibility for that. So this is just kind of an ideal world. If you're actually using your calendar on a day-to-day, week-to-week basis, you might create this as the template for times. And, for these patient hours, you may kind of leave these open so that people can actually drop scheduling appointments into those hours. And you can kind of shift things around as you go. You can always restructure that according to what you need. Okay, so back to the cash flow compass. Everybody clear so far? How's everybody tracking? Yeah. Okay, good. So that is the time goals piece. And what you'll see is this is one last feature. Based on the desired daily time, this calculates desired weekly time. And as you fill out the actual time spent on each of these days, it's going to give you the amount of time that you've actually allocated in this schedule. And you can end up comparing that to what you had written based on your desired daily time. It doesn't necessarily have to be the same. This is just basically a starting point to help you kind of get started in the right direction with a basic proportion. Okay, so moving on here, this is what it can look, this revenue goals piece. This is the primary sheet in this book, and that's why it has this orange highlight on the bottom of this tab. This is what it looks like when it's blank. So this is what it's going to look like for you. You have these 10 revenue streams for a business. For a business like ours, I think everybody here has a pretty small business. That's probably overkill. You could have a bigger operation here as well, but your business may only have 1 or 2 or maybe up to 4 or 5 revenue streams. And you can consolidate or break them out as needed, as makes sense for you and your business. Now, there's 2 ways of going about this exercise of actually setting the goals for each of these revenue streams. And I'm going to show you the simplified version. So in the goal sheet, I basically, in this area, I made 5 revenue streams, and I basically deleted all the other ones that were there, just so we only see these 5. In this particular business model, I'm doing one-on-one consultations, health consultations. I have some products that I sell. I do a few Ayurveda therapies, for instance. Let's say that. I have some group programs, and I also have an ongoing membership program. And depending on your business model, your group program may actually be the same thing as a membership program. This is just for the sake of this exercise. Now, if this weren't here, I'm just going to show you what this could look like from scratch. Let's say that you would basically the first and simplified method is to actually plug the numbers in directly to the sheet. So let's just say, each client pays me $150 an hour. And let's say that I have 6 of those per month. So that's I'm hearing some noise, so I'm just gonna make sure everybody's muted. Feel free to unmute yourself if you have a question. Okay, so we got 900. I'm just gonna drag and pull that across. This isn't a lot, but I'm saying that because my one-on-one consults aren't actually the main way that I'm pulling in money. So products, let's say we're gonna do 200 a month on products. You could pull that over. And if you have seasonality in your business, let's say you get busy in the summer, you could put some more in here. In the summer, you can just kind of I call this kind of like painting with numbers. You can really just kind of embellish this financial picture in a number of ways, whatever ways make sense to you. So there we go. We got some therapies. Let's just say we're going to do $100 of therapy each month. You might start very simple like this. And as you look at it more closely, you can start to get into more of the nuances. Now, here's where this gets a little bit more nuanced. Like the group programs, I may be only launching twice a year. Let's say I'm planning to launch a program in April. And let's say I'm going to enroll 5 people at $2,000 each. So that's $10,000 that I'm going to bring in April. Let's say, so we're going to do like a spring cleanse. That's going to be an April thing. And then we're going to do a fall cleanse. I'm going to enroll people in September. And let's say that's going to be my second launch. I'm going to have a little more marketing momentum at that point. And I think I can get 9 people into that service as opposed to 5. So let's say we bring in $18,000 for that. And then we have the group program, the memberships. So here, I'm just assuming the membership models. These are people who are going to continue the services after the group program. Okay, so we got the group program there. If you wanted to get more granular, this is a way to do that. So let us group program version 2. Okay, so one way to do that in this sample, okay, I'm actually going to show you how to do this in this other one. So it's called General Revenue Stream Group Program. And this is going to be showing up in yours. Somehow I lost that one. I had something set up. So let's say your group program is $2,000. This is going to let you come in and actually do a more granular forecast for each product. So let's say remember we said we were going to enroll 5 people in April, enroll 9 people in September. Automatically, it's building that out. So you're going to sell 14 of those programs total, 5 and then 9. It's going to calculate that you're automatically, it's automatically calculating. So you're going to bring in 10,000 and then 18,000. And then what's super cool about this feature of the sheet is then you'll see this if you scroll back to the goals, it's going to show up in that way in the goals. Now you can also, in revenue stream 1, what I would do normally is I would rename this to match that. The group you may have a smaller offer for maybe like a hybrid course that allows people to do an e-course and have just maybe only a couple laser coaching sessions with you, or maybe none. Maybe it's just a standalone evergreen course. So let's kind of build this. We'll call it a hybrid course. And let's say we're selling that for $497. And since that's a little bit more like we can sell that anytime, let's say that we are building it out in January, February, and we start selling it in March. We have a little bit of a launch. We get 3 people to enroll. We're just kind of building. Let's say that we sell 1 more each month. Cool little formula to do that is just to press equals, hit the cell right before it in sequence, and then write plus 1. That's going to put 4. And then if we take this little box in the corner and drag it over, you're going to get something that's pretty cool. It's going to show you that each month is selling 1 more than the previous month. Okay, another way to do that is just to type it in manually. That just takes a little bit longer. And that's going to give you an equation. And we're going to see that show up in the goal sheet. So again, this is a little bit fancier, but if you're planning out launches and selling products with like unit values, this may be useful to do. Or even if you're selling one-on-one consults and you know roughly about how many you sell per month, then it may be useful to do it that way as well. Okay, so you're going to see here the result of that group programs. You're going to see a forecast going all the way across. You're bringing 65,000 per year just based on those group programs. Now I'm going to have to remember to go in and clean up the sheet so that it doesn't mess everybody up when they go in to do it themselves. Okay, so after doing this revenue projection, it's showing that I'm bringing in $48,000 total for the year. Now, if I go back and compare that to my goal, I actually wanted 108,000. The question becomes, how do we drive more revenue? Which of these revenue streams is going to be easier for us to scale? Which of these revenue streams do we enjoy doing? Maybe if any of them are underpriced, maybe we can adjust the pricing of them. Let's say I could actually do a lot more one-on-one consults than this. I could actually probably do like 2,500. I'm way underestimating on that. So if we were to adjust that automatically, okay, so we're bringing up our revenue to 67,000. Maybe we're realizing in order to meet our revenue targets, we may need to actually get more people to sign up for our group programs. So maybe we need to do something more like this. And whenever we make adjustments like this, you also want to ask yourself, is this realistic? We don't want to set a goal so high that it's not even realistic, because then you get discouraged and you're like, what's the point of using this tool? I'm just going to be frustrated with myself if I set a goal that I'm never going to achieve. So there's an art of goal setting, something that's within the capacity of our ability to achieve, but it may be something that's just beyond like a stretch goal, just beyond what we've maybe done in the past. And, maybe in such a way that even if you only got 80% of the goal, you'd still be happy with achieving that goal. So with, 108,000, if you've never achieved 108,000 in a year, maybe you've done 50,000 or 70,000 or 80,000, maybe that's like a pretty reasonable goal to go for. Okay, so we're getting close. We're at 84, and maybe we just stop there and be like, I'm not sure if I can actually do more than that. realistically based on everything else that I have going on. And as I reflect back to my time goals, I really don't want to be like working more than 4 hours on any given weekend to like hustle through a launch or anything like that. So maybe I'm going to be content with 84,000. If that's the case, then you might just go back to the time goal and say like, okay, I'm going to be good with 84,000. Let's see what that looks like. So that gives you an adjusted monthly goal of 7,600. Your adjusted weekly goal would be rounding up to about 1,800, and you're at 355 for the daily goal. Okay, compare that to sort of how these are panning out in the sheet. You know, it's if you're an early stage business, this might actually make sense. That these months are a little bit lower. You know, the months that you're launching, you're bringing in a majority of your revenue in those months. So it kind of averages out over the long term. But you're seeing that most of these months are about half or even less than your 7,600 per month goal. Okay, and that's okay because we have these big launches. We're having huge spikes of revenue that are bringing in the majority of what we're needing for the year. Now that we have our goals set for the year, the next step is how do we track our progress from month to month from week to week to see how we're progressing towards these goals. And this is really where the secret sauce is, because we can create goals for the year and forget all about this sheet. And remember what we said in the beginning? We were talking about the reticular activating system. We were talking about writing down goals. What happens when you write down a goal multiple times or remind yourself of that goal multiple times? Do you think you're more likely to achieve the goal? Right. Yeah. Thumbs up. Thumbs up. So this is why I highly recommend building it into your routine. Ideally, I would suggest at least a weekly routine to come into this sheet and check in and track your progress. And so here's how you do that. And, you know, creating a routine, I recommend setting it some time as a business owner, maybe even the specific day of the week where you do your financial routine for your business. It may even be a specific time on a specific day for your business to go through the financial routines for your business. So for me, it's Fridays. I call it Financial Fridays. Fridays are days that I spend working on my business rather than in my business. So I limit the amount of client hours that I do on those days to really focus on building systems. If I need to catch up on admin work, I'll do some of that. But you know, I'm working on marketing strategy. I'm tracking my KPIs or key performance indicators on that day, and you know, taking an inventory of my progress for the week. So in January, let's say after the first week of January, what I would do is I would, if it was me and I was working on my business on Fridays and I was coming into this tool, I would open up my business bank account and I would look at my business bank account. I would look at all the income coming in for that week, and I would come in and record it. So let's say on Monday, I had an appointment. Someone brought in $200 and I sold some products. Tuesday, I didn't have any appointments that day, but Wednesday I had a couple appointments, and I had somebody sign up for my membership program on Thursday, and not too much going on with the group programs. And Friday is work on business day, but somebody did sign up for a therapy. So this is what this is looking like. Now, I want to help you understand what's happening with these formulas, because you're seeing colors change up here. This daily under or over piece is basically taking this daily target based on your yearly goal. So it's going, if you look at the formula, this is telling the story of what's happening here. It's taking your cell B12 from the goals sheet. And the goal sheet is here. So what cell was that again? B2? B21. So B21, target, it's actually pulling the target daily sales from here. It's dividing B2, which is this number, this goal that you had for the month based on these numbers that you put in. It's dividing that by 30 days in the month. That's giving you a threshold of $93 per day, roughly. Okay. So of course, you're not going to earn $93 exactly every single day, but over the course of time, you'll see whether you're on track for the month or not. So since you earned $220 on Monday, and 2 days in the month have passed, you actually are kind of ahead of the curve. You're ahead of the 8 ball by about $33 based on this formula, right? We didn't earn any money on Tuesday, and so we're a little bit behind. Maybe we're just kind of spending the day marketing. We didn't have any appointments. And that's totally fine, because the rest of the week, Wednesday, Thursday, Friday, we brought in some good income. So by the end of the week, Saturday, Sunday, you notice we're not actually bringing in money on Saturday, Sunday. If you're making passive revenue, you might actually, like selling products online, you might end up logging stuff on those days. In our case, we're not, but we're seeing that we're ahead of the curve. And then if we weren't earning any money until like next Tuesday or Wednesday, you'd see that we were a little bit behind our financial goals in terms of progress for the month. So that's not necessarily to make us stressed. It's simply to help us become cognizant of how well we're progressing towards our goals. So at the end of the month, if it's like the 20th and I'm realizing, wow, I'm $900 behind my goal for the month, this would open the question or the internal dialogue of, what do I need to do to sell some more services? Maybe I need to get on social media and do some content. Maybe I need to reach out and do some follow-ups, right? So again, this is one of the benefits of coming in here weekly, to realize, okay, what do I need to do next week in order to hit my goal for that week, right? And you might even be looking forward even more than that. What do I need to do next month in order to have a better month than this month? Okay, so over the course of months, let's just fill out January as if we completed the month. Again, looking at the bank statement, just, you'll see numbers arrive on the bank statement. Generally, I think you'll know where those monies are coming from if you have a fairly small business. If you're not sure, I don't know if it's super necessary for you to get too granular. It could be fine just to, and I'm hearing not everybody's muted, so I'm just going to mute so we can keep moving here. Feel free to raise your hand and have a question, unmute if you have something you would like to jump in and say. I know I'm kind of crunching a lot of numbers here and going fast, but feel free to intervene if you need to slow me down and get clarity on something. Okay, so looking at the bank statement, seeing money that's landing in your bank statement, let's say that you end up with this amount of money for the month of January. It's going to show up on your sheet. And let's just predict that you hit your mark. So we want to project success, right? So let's see. Let's say not Saturday. That's not too realistic for money to hit necessarily on a Saturday, unless there's a lag. Okay, so let's say that you crushed your goal by $770. You brought in $3,570 for January. This under over portion is going to show whether you're above or below. And for each month, and you'll also see that, because I have data still in here for October and November, you're seeing those months in there. So October and November, there's some data in these months. If I pulled that out. So this month today, actual, this 3570 is showing up as January, and you're also going to see a total here in column O. So as you go into February, you would do the same thing, kind of just enter in your earnings for the month. I'm just going to kind of splatter some earnings in here so we can populate the sheet and see what that looks like. Okay, 5,000. Let's see what that looks like. We had a really, maybe we sold a bunch of something on that day. We sold like a big machine from our store or something like that. If we have one, maybe you sold like an infrared sauna that you carry or something. So in February, you've seen that you crushed your goal. You did really, really well. So you're now ahead of your goal to date by 5,400, or actually you exceeded your monthly goal by 5,400. And you are at 11,770 for the year. And this is also showing how much you have left for the year. So you got 72,430 left to go. So this is how you track your goals from week to week. You can actually do it day to day. I don't necessarily think it's necessary for those of us who are like health coaches and health practitioners to do that. That might be for more someone who's specifically working in sales or real estate. You can go in here and you can actually see on a daily basis, like what you're selling, because that can really, the guys who are really, professional salespeople are tracking. I'll tell you, they're tracking stuff like this on a daily basis. So I hope that's helpful for y'all. I know we're coming up on time. One last piece that I want to show to you is something called Live Plan. This is a software that takes it to the next level for projections. This is where you can project your cash flow, not only just the incoming revenue, but also the outgoing expenses. And this is a sample company file. This is a demo integrative medical company. And in this, you can basically forecast January 2023. In here, you can get just as granular as you did in that sheet, where you can have unit sales economics. There's a lot of ways that you can cut this. I'm just saying unit sales would be individual appointments. Let's say that you have a naturopathic doctor practice. And if you're the primary naturopathic doctor, maybe you're able to do around 24 appointments per week, about 96 appointments per month. That's kind of a lot. That's a hustle for a lot of doctors because there's a lot of, note taking and stuff like that has to happen outside of those appointments. Based on a rough average between products and services of about 225 per appointment, that's both follow-up appointments and first appointments. We're saying that we can pull in about 21,600 per month, right? And so we can kind of do the same kind of thing with a part-time naturopathic doctor. Maybe you have a hormone replacement therapy specialist, esthetician. You can build out all of these different things. Maybe you have like a medical unit that you're selling packages for. I think Moshe's here. He sells these medical units. This is potentially something you can use to help your clients to forecast how much sales they might get from that unit and determine when they might actually get ROI from that purchase that they're making from you. That could be super powerful as a sales technique to provide something like this. And so, based on this projection, we're looking at this like, yes, I think I can have this many appointments for each of these providers and sell this many packages for this MSella machine over the course of the next year. So this could potentially be my total revenue per month, going from developing this from 55,000 roughly per month to, we see some seasonality. People take vacations in August, so that's coming down. But September is kind of like the health new year. It's coming up. A lot of people get more active and are spending money on their health in these months. September, October, November, those are power months. So we're seeing, based on this forecast, we can pull in about 800,000 per year. Now, here's where we have the expenses. Expenses are maybe not deviating too much. They have a marketing budget. They're spending money on marketing, which is important if they want to fill those schedules. You can forecast your personnel, how much the salaries and wages are costing per each worker bee in your clinic, right? And with that, you can get a bigger picture of how much operating income is another word for net profit, how much profit is actually coming into your business each month. Another key metric or key performance indicator is your net profit. These are really amazing net profit percentages. You're up in 28%, 31%. This is a very ambitious forecast. Typical net profit percentages is around 10% for health businesses. That's like the benchmark. And that's actually sort of a good benchmark for any healthy business. Bear in mind, this is assuming that the owner is on salary. If the owner is not on salary and they're just paying themselves from profit, as is the case with the sole proprietor or an LLC, this doesn't necessarily apply. You'll track that in a different way. Okay, and what's cool about a tool like this is you can actually see how much cash is ending up in your bank account, how much you're forecasting to have in your bank account at the end of each month. And based on this pattern of spending, and basically based on this pattern of activity, we could potentially have roughly 220K in our bank account at the end of the month. Now, again, same thing that we talked about, like adjusting and tracking from week to week, from month to month with the previous tool. Same applies here. This is only valuable if we come in every month, check it, see how we did according to our actual financials, when we look at our actual profit and loss compared to our forecast, from there, we can either adjust our goals for the next quarter, or if we're doing it on a monthly basis, we can adjust our goals for the next month to be a little bit more realistic. Okay, so that's just a cool tool that I thought to share with you if you want to take this to the next level. But honestly, I think the cash flow compass tool is enough for those of you who are sole proprietors. I know we're at the hour, so I'm going to wrap this up real quick here. If anybody here wants more information about either coaching services or bookkeeping services, I'm happy to book a strategy call with you, deliver value, help you out with your business, reflect to you maybe where some of the key developmental strategies that you can employ in your business to get to the next level. I am offering bookkeeping cleanup and catch-up services for those who need support with their bookkeeping. I'm taking on clients right now, and I do have one slot for a coaching client for next month. I can take basically 2 per month. I have one already booked, so I got a spot for one more. Otherwise, the next time I'm taking on is February. So if you're interested in any of that, feel free to reach out at any time. I think you all have my email because I sent you an email for this invite. And hope you have a wonderful runway into the new year and a very successful 2023.